Good afternoon, everyone. It's great to be here, and I'm conscious that this is the last kind of piece of input for you before a panel discussion and then a drink. So I'll try and make it as palatable as I can. Even a few years ago, a conference presentation or conference paper on cyber risks was something of a novelty in any business group. No more. For any business, for almost any industry group, cyber risks to business are increasingly mainstream, more talked about, hopefully better managed, and relevantly to this group, increasingly insured. Cyber incidents, it's important to say, are complex systemic events. They're not point-in-time incidents. There can be really long gaps between cyber intrusion, when you get hacked, and the discovery of that intrusion. The average is said to be between 9 and 10 months, but that of course only covers intrusions that are eventually found, not those that remain undetected. Post-event, or at least post-discovery management, is really complex. Good management can do much to reduce losses. There can be adverse regulatory consequences in multiple jurisdictions, and of course losses often, usually, extend well beyond the immediate costs of restoring IT systems and websites and resecuring data. So reflecting this complexity, insurance cover has evolved quickly around the world and now often includes both meeting financial losses and offering expert consultancy to improve security and on-the-ground support during the likely period of crisis following the discovery of an intrusion. Cyber insurance visibly covers the problems and costs of notification, liability, regulatory compliance, loss of income, extortion or ransom, and even reputational damage. It's a comprehensive offering. Insurers offering this sort of cover face a number of challenges, both immediate and prospective. Before examining these, which I'm going to go on and do, it's worth noting that the behaviour of cyber actors, the bad guys, continues to evolve very rapidly. The distinction, real or claimed, between state and non-state actors is collapsing. Levels of criminal organisation and the associated industrialisation of cybercrime are increasing. The long delay that I've referred to between intrusion events and detection of those events remains a really demanding feature in their management. It's important too to note that cybercrime and cyber incidents are chronically undermeasured, partly because incidents may be underreported, partly because they're simply not noticed. But I see little dissent around the world, and certainly the people I talk to, from the conclusion, which is important for what I'm about to say, that criminal activity on the internet is certainly endemic, possibly epidemic. It seems to be growing quickly in scale and in impact, and there is little sign of this trend slowing. So it's a big problem and it's getting worse. The challenges for any business offering large-scale customer service or just managing itself online are such that it's fair to conclude that globally the internet has become an ungoverned space in its own right, where state power and the rule of law are limited at best. It may always have been quite anarchic. I think what may have changed has been the extent to which societies are prepared to depend on the internet. States have divergent interests too. There's no global consensus in favour of proper rules, and there is no global hegemon to impose them. So for modern societies, this absence of rules on what has quickly become the public highway of our lives is a novelty for which we are often ill-prepared, individually, organisationally, conceptually, and as a community. The partial patchwork of public, corporate and private rules now in place has an almost medieval feel, certainly a pre-modern one. It's a sort of fragmented world we once had, then overcame, and now find ourselves inhabiting again, almost by accident. As an aside, and kind of developing that theme, but one I think that's relevant to the conclusion I'm going to come to, I consider that the recent arrival of the ungoverned internet as the public highway of our lives and the data economy that it supports and the destructive urges that it has unleashed as defining the abrupt, quite unexpected end of the so-called modern world order that arose from the climatic, social, religious, political upheavals of Europe 300, 400 years ago in the 17th century. This was the world of Thomas Hobbes' 1651 book Leviathan, describing the internal bargain within countries of the state and its people, where we pay taxes in return for order, and where even bad government is demonstrably better than no government. Yet the impotence of governments faced with the scale and complexity of the internet means that digitally imposed order is not possible. Actually, globalization has meant that taxes are optional too if you're big enough. The state must therefore redefine its role if it is to survive. Meanwhile, it quietly begins to shrivel and wither away. Not quite the process that Karl Marx predicted, but a strange echo nonetheless. And externally, in relations between countries, the ordered world of the 1648 Westphalian state system is ending too, with its kind of mannered arrangement of equal sovereign states conducting or failing to conduct world affairs. The internet and the digital economy makes every border permeable and all sovereignty partial. It's also supported the rise of great data-driven non-territorial states, Google, Amazon, Facebook, for example, each of which has some capacity to act independently of states and of which have their own quasi-Hobbesian bargain where they don't protect your data but they organise it, they don't tax you but they monetize it by selling your data. Freed from the constraints of statehood and many of the limitations of place, their role continues to evolve. Indeed, I would argue that the largely Western idea of the internet as a free space with trust and good behaviour as its guiding social norm now seems thoroughly naive. Other non-Western states look to partition, to interception and to control. In the private sector, as we've heard compellingly today, an immense data economy is growing up, looking to harvest and exploit commercial and personal data. None of these developments is necessarily bad, and none necessarily reflects a new motivation, but rather a simple ease of execution. Human nature remains as it always was, so doing bad stuff or good stuff or selfish stuff or simply commercial stuff on the internet is quick, easy, safe and cheap. There are two features of this world, and I think that from the perspective of people in this room are worth mentioning. One is the emergence of hugely positive returns to scale for data-based services. Indeed, for services where network effects lie at the heart of the offering, like Uber, the globally efficient number of operators may well be one. Similar returns to scale apply to internet crime too. So the race for scale is, at least for now, a significant feature everywhere. The second thing to highlight for an audience like this is that human nature means that people are astonishingly trusting online. It's for others to fully explain this in psychological or, I suspect, neurological terms, but quite simply trust on the internet is misplaced. This has consequences for security, for organisations, and for public life generally. It's become what some have started to call a post-truth world, where internet delivered, invented facts support political and national agendas with a cooperative following among the wider community. Indeed, the Royal Society of Arts recently published research showing that people exposed only to views similar to their own gradually develop ever more extreme views. The internet facilitates this sort of self-reinforcing choice in favour of one's own prejudices. So what does this mean for insurers? I think that insurers are likely to quickly know a lot more about cyber risks than many, if not almost all, of their clients. Sheer number of customers and incidents, a focus on risk, and the relentless empiricism of the work that you all do all points to this outcome. Insurers will therefore find themselves managing their own exposure by seeking to educate their customers, hopefully set behavioural expectations, and I would argue shape wider rules designed to help, intended to design the risk out of the insured property. Nothing new in that, as is exemplified by the history of 19th century fire insurance and 20th century work on automotive safety, for example. It's just that for providers of cyber insurance, the individual risks may well be orders of magnitude bigger than previous risk categories. Everything is a catastrophe. And the world really is full of highly organised arsonists. So, you know, it means that the internet has become a contested space, and insurers and their clients may well not always be destined to win. Facebook famously says, move fast, break things. I would argue that for insurers, including those in this room, it should be move fast or your business will break. If cyber insurance is to work, my message is that you all need to be bold. In particular, I'm going to argue that you face an especially complex environment in 5 ways. The first of these is a rapidly evolving set of incomplete, incoherent global regulatory requirements imposed on your customers at state and sub-state levels, as likely to punish victims as perpetrators through misconceived privacy rules, for example. I'm going to argue that compliance is itself risky and certainly costly, and that you should push for common rules across developed economies. We heard earlier about the recent EU directive on some of the notification requirements. That's a really good development. The bigger the piece of the developed economy covered by common rules, the better. Second, conflicting incentives face victim company or organisation management, especially where disclosure of a cyber incident affects management survival. It means that from your perspective, insured entity behaviour, whether you can rely on people to tell you the truth, is inherently uncertain and trust may be absent. The truth is that cyber intrusions are often fatal for management. So no one learns from their mistakes. They don't get a second go. Adaptation is slow, and there may well be a lot of concealment going on as well. Thirdly, skill gaps abound. Insurance companies' offers of after-the-fact consulting help is important, but may well be too late. Insured companies, your customers, will need to be incentivised to minimise risk and prepare actively, not just passively, for adverse events, exercising active threat testing, and, for example. Perhaps think of fire protection and fire drills, not just putting fires out. Fourthly, changing technology is very quickly shifting the threat frontier from the boundary of information to what the professionals call all information all of the time, and then on to insider threats. It's essentially a shift from a technology threat to a people threat. And what is going on is that trust is beginning to break down in many organisations. As intra-organisational trust breaks down, the challenge of dealing with the risk of cyber intrusion grows. And finally, state actors and their online actions are real, and that means that insurers are effectively now often insuring against undeclared, unacknowledged acts of war, which every insurance policy I've ever tried to read the fine print of tells me doesn't happen, without a set of rules or a framework to deal with the corollaries of acts of war, which is state-sponsored or state-directed acts of escalation, deterrence, and retribution. These are trends which you can see now. Insurance is essential for risk management in a modern economy, and cyber risk cover is a vital emerging product category. Insurers need to engage on each of the issues that I've set out above to shape the commercial environment satisfactorily. You've heard about regulation affecting your industry earlier this afternoon. This is about the work that you do to shape the regulatory and operating environment for your customers as well as yourself. Trust, confidence, shared expectations, and sheer professional competence are issues at the heart of any insurance relationship. My view is that these components must be reinvented in the world of the internet. What might that mean in practice? If the assumptions that I've set out today are true, and let's just kind of recap that the problem of cybercrime and cyber intrusions and cyber risks. The Internet of Things we've heard about is large, growing in scale, growing in effectiveness, in other words, it has more impact, and likely to have a bigger effect on your customers. My second assumption is that governments, certainly in the West today, are relatively weak in terms of their will, their capacity, and their capability to act. And finally, that insured rather than insurance, companies are less effective, your customers are less effective at dealing with this than you would want. Then my message to you is that you will need to compensate for those trends. The first best solution will always be for governments to take the lead, set and enforce rules, and do so cooperatively across the world. That is not in prospect. That first best world is not in prospect. The question I think that you're left with as individual operators and as an industry is, what is the second best world that we can aim for? And I think there are some components that we can point to. In his monumental study of the United Kingdom's machinery of government, published in 1919, but as you can tell from the fact that I have to mention it, sadly overlooked today, Lord Haldane described the challenges facing any public authority. It is, he said, to organise oneself around one's scarcest resources, knowledge and skills, and resist the urge to pander too much to one's customers. It's an interesting message to reflect on now. As a first response to cyber risks and challenges, I think that the work that some insurance companies are already doing to build teams of so-called consultants, but build teams who can intervene effectively when things go wrong, will become increasingly important as a way of concentrating vital skills and bringing them to bear effectively and quickly on problems as they emerge. Those skills will not just need to be technical and forensic, though they will certainly need to be that, but they'll also need to embrace legal issues, media management, and quite simply management expertise. I can see companies in the insurance world doing that around the world now. What I would suggest is that we need, as an industry, to invest in an organised way in those skills and make sure that they are effectively used. Secondly, you will all need to get involved, individually and collectively, in policy making to set the regulatory framework within which your customers operate. You need to start thinking about what you can achieve in regulatory areas of privacy, compensation, notification, civil liability, disclosure. An obvious example is that company audit rules need to now encompass a standard approach to measuring and commenting on cyber preparedness, and your industry needs to press for that to happen globally. Significant improvement in the operating environment is possible through sensible international harmonisation, but that won't happen by itself, and I don't yet see anyone seriously calling for it. Governments, in my view, lack the will, the scale and the skills. You as an industry collectively have your own financial resources on the line, and you will need to take the lead more than you expect globally and offer some sort of sense of where you want to get to globally, backed up by strong arguments and reasonable solutions. The last point is quite significant. We're about to see two major free trade agreements, the transatlantic and trans-Pacific ones, abandoned because proponents failed to see that going too far in just one respect, which is investor-state dispute settlement, would derail the whole thing. This is worse than unfortunate. It's a blunder, because the issue had become a clear showstopper in the late 1990s, years before these negotiations started, and ambitious lobby groups were yet just too greedy. Anything we propose by means of regulatory harmonisation needs to pass the test of suspicious public opinion. And finally, I think you have to be prepared to think of and for the unthinkable. The truth is that the struggle against cybercrime and other forms of online bad stuff, as well as destructive hacking, ransomware and all the rest, may well be doomed to fail if we proceed on current thinking. The bad guys are innovative, They have effective tools, a dynamic, fast-to-fail business model, access to a global pool of excellent skills, and they have no scruples whatever. We have roughly the same technology, though we probably innovate a bit more slowly, roughly the same skills, but we probably don't pay them quite as much. We have a slower moving business model, many more rules, and we've got scruples. So if we carry on, my prediction is that insurers will end up taking a fixed share of profits through premiums and facing pretty much open-ended losses. And that looks to me like a slow motion failure. So what's the answer? There has to be one, not just for the insurance industry. The survival of market economies depends on their ability to have a reasonable expectation of effective asset ownership over time. And if information assets are subject to cyber theft, to being looted, then returns to investment will collapse further and our societies will be in real difficulty. That means that insurers, in my view, need to start thinking through the issues that I raised earlier, or referred to earlier, around deterrence, retaliation, and escalation. Let me be clear, this is not a call for some kind of bizarre vigilantism. It's a call to start thinking about the steps we as a society and you as an industry need to consider if we are to change the incentives facing the attacker on the internet. The first best solution remains coordinated government action. But if states can't be persuaded to act, then companies will have to act if they are to survive. Coming to act just a little like the large non-territorial states, the Amazons and Googles of this world that I referred to before. There are already signs that this is beginning to happen, particularly in banking. My argument and my kind of message for you is that it's better to engage in this debate carefully to help shape the thinking, to secure the skills, than to have to react to others' initiatives. If you are to survive, let alone prosper, in the world of the internet and of cyber insurance risk, this may well be the path ahead. It's daunting, but in my view, it's unavoidable. Thank you very much. And 4:30, perfectly on time, just saying. I'm not standing between anyone and a drink.
Well done, Ian. MCs love people like you. Now to also acknowledge too, I think we should, actually just before you go, okay. I do have a question for you. This comes through on the email. But I just wanted to acknowledge Lord Haldane. Haldane, 1919. I thought he was extremely prescient, particularly about the way government departments should organise themselves.
He invented the territorial army as well. So he's a man.
Did he really?
Yep, and he invented the public rules for funding science.
Well, there we
are.
Quite a contribution.
A real polymath.
Now, I've got a question from the email, which says, is there a scenario that you might envisage whereby the risks of conducting business on the internet outweigh the benefits?
There is, in some businesses and in some contexts, there is, I think that scenario does exist. But generalising, I think it's a very good question because it challenges you to say just how far can this go before the kind of the returns to theft begin to break down. So whoever asked it's a very penetrating question. The truth is that in different sectors of the economy and different supply chains, the returns that you get through the delivery of efficient digital services will be slightly different. And so this is one of those questions where the answer is perhaps it depends on the exact context. It depends, I think, on whether the issue you face is a compromise of the transactional process, so loss of personal data, credit card details, all of that stuff, or actually you are looking at the loss of information which is critical to the value proposition that you're offering. So pricing information, for example. Would I think that you would want to go back to people sitting in offices taking your premiums in by cash? I think that's probably no. But if you wanted to think about how you really, really protect very, very sensitive information, which is your core intellectual property, around how you strike prices or how you think about the measurement of particular risks, then that might be the case. There are companies in the world who've built separate little systems where they sit, which they don't connect to the wider internet, and certainly don't connect to their wider operation, where they try and keep the intellectual property that is really material to them, and that's the kind of the beginning of the example. So for some people, in some circumstances, yes.
It's almost like a quarantined environment.
Correct.
Ian, thank you very much. Fascinating insights. And here's something to take back to Canberra.
Thank you.
Enjoy it maybe before you jump on the flight. Right?
Don't worry.
Thanks very much. Ian Fletcher, ladies and gentlemen.